Alright, so in this tutorial, as promised, I am going to unveil one of the most overlooked yet powerful concepts that you will ever come across to essentially pinpoint areas in the chart where a potential reversal of sorts of some type of magnitude is it's likely either small in scale, or it can also at times be large in scale. Now, the concept that I refer to is what I call the 100% symmetrical projection. Okay, now this is a technique that in my opinion, by those that are savvy traders and know their stuff, it is widely used by these traders to either take profits off the table, or at least to reevaluate their positions, because the market at that point appears to be fairly stretched. And as I'm going to demonstrate in this course lesson as part of the exercises that I've prepared for you, you will be mind blown how accurate this target can be. At the end of the day, it really boils down to be as precise as possible in picking in our charts potential turning points that are going to be adding through this 100% projection target another layer of confluence to refine, as I said, our position in peaking levels. Okay, so do not overlook for a second this technical component of the 100% projection target that I'm going to walk you through this in this lesson in very detail. Now, if you think about it, the power behind this simple idea of the 100% projection target resides in the symmetry and the harmonic relationships of market cycles. And essentially what we can do as traders is we can grab a Fibonacci retracement tool, do some editing with the numbers, and by drawing this 100% projection, which is, as I said, is going to require a few tweaks on that Fibonacci retracement tool, only to reflect the levels that we really want to be paying attention. Okay, in this case, the selecting a bracketed area, and from there duplicating the area into the 100% projection. So by selecting this 100% projection, we can anticipate the area in the chart where some type of pause and potential reversal in the price is going to be likely to occur. And this would be due to, and there are three main reasons why we see a turnaround in the price around this 100% vicinity. The number one is that the side in control, the side that has actually been dominating proceedings of the cycle, has a tendency to take profits off the table around this level and to reevaluate positions around this area. So that's the number one reason. Second reason is that counter trend traders are going to be adding positions against what they consider to be an overcooked or out of whack movement in the price. Okay, and this can be seen or perceived obviously from different time frames. Each single time frame has life on its own. And the third main reason is because these are price points where limit orders tend to be set by the market makers. Remember that the market makers are going to be there adding liquidity in the market, also at times withdrawing liquidity depending on whether or not we have major risk events. But the point remains, this is a position where market makers tend to set limit orders. Okay, so bottom line, you are going to be amazed at the accuracy rate of the 100% symmetrical projection acting as an initial wall, a dynamic support or dynamic resistance that is going to be causing a reversal in the trend as a result of the of the reasons that I just mentioned, about the rationale that I just mentioned. Also, do remember that it cannot be taken as a standalone, the 100% projection target. It definitely needs to be on top of other reasons, other confluences, but definitely this 100% projection adds, as I said, another layer of confirmation or confluence, if you will. What's important in this lesson is that you gain the necessary knowledge to build a strong foundation on how these levels get to be drawn in the chart. Identify by going through many repetitions yourself. Wire your brain so that you can incorporate it as part of your trading arsenal when it comes to the analysis and the study of the technical chart. And without further ado, now let's get started. Let's jump straight into the charts.
All right, so let's get started. The first thing that we want to do is making sure that we have set the Fibonacci retracement tool to the following numbers that I'm going to be going through right now in this first explanation. So we want to grab the Fibonacci retracement, either it is through TradingView or MetaTrader 4 or 5, whatever platform you're using, and make sure that once you are in the edits, in the parameters, you select the following numbers: 0, -1, 1, 0.5, and -0.5. These are all the numbers that you are going to be needing in order to preset the Fibonacci retracement tool to the way we want in order to calculate this symmetrical projection, this 100% symmetrical projection. Okay, make sure of that. And also you may want to click on extend lines to the right so that there is more visibility as the Fibos as the 100% projection keeps playing out in time. All right, so this is the essential first part that everybody has to make sure it's gone through, which is setting the Fibonacci retracement tool in a way that it's going to allow us to calculate the 100% projection target. Not also important that if we're interested in the calculation of an upward projection, we must drag this tool from the bottom to the top. And let me give you a demonstration. So this is the euro against the US dollar on a 4-hour time scale. So if we want to make a projection from the upward projection, I should say, then we want to be dragging the tool from the bottom to the top, just like that. Okay, in this case it would be from this point, and I will get there how we actually going to be selecting the bracket areas through this low right there, or even this low, because there are no two connecting points in either way, so we could make this selection. And even though we are not going to yet touch on the attributes or the power it has, notice that without even preparation, notice that the first peak on the euro US dollar on this major run to the upside came straight to the 100% projection target. Now on the contrary, if what we want is to obtain a downward projection, we need to be dragging this normal Fibonacci retracement tool in order to get this symmetrical projection from the top to the bottom. Okay, so let me give you an example here. I'm going to be deleting this one, and then I'm going to be selecting once again the Fibonacci retracement tool with the predefined numbers that I just explained. And at the top, notice here that we have a lot more interactions through this level. So I'm going to be selecting this from the top through the breakout point, which the breakout point, if you actually observe closely, is right there. And what do you notice? The actual 100% projection comes around that point. Actually, the very first rejection of that level came at the 100% projection, and then we had a slightly deeper penetration, and then eventually we did reject where to the next 100% projection upward. In this case, on the back of the downward projection being reached. Okay, so make sure that you are properly drawing your 100% projections from bottom to top on an upward projection and from top to bottom on a downward projection. Okay, don't forget this, otherwise the 100% number is not going to pop in the chart where you want it to, because you are doing it wrong from the beginning. Now, with that subtlety out of the way, next is to learn how to draw these projections in the chart by first identifying what I call a bracketed area. Now, there are two types of bracketed areas. Let me introduce the concept to you. As you can see, we may actually have a bracketed area within an established range, which is what I'm showing you on the left side right here, or we could have a bracketed area within an active trend, which is what I'm showing you on the right side here, right? So let's wait a second. Let me just delete that lipstick. All right, let's continue. I've gone back in time a little bit on the Euro US dollar 4-hour chart, and the reason being is because I was looking for a range, and the range has not been broken as part of the daily, as part of the present action that we are seeing in the Euro US dollar. So I had to go back a little bit further in time. And so how do we measure a bracketed area as part of a range? Okay, so in the case of a range, we need to drag the Fibonacci retracement tool from one edge of the range to the other edge, bearing in mind that we want to select the levels with the most price interactions via wicks or bodies at the top and at the bottom, or the other way around, at the bottom and at the top. And in the case, well, I'll get there today. In the case of an active trend, let's first concentrate our attention in the ranges and how we can select out of it the bracketed area. So notice that this is a clear range that was established right here, and what we want is to get our Fibonacci retracement, and we are gonna work out what was the point of the most interactions on the way down. And you would agree with me that it was this one. Notice we got a week, we got another week, we got another week, we got closes here. So therefore I would suggest this to be the point of most interactions, and leaving alone this week, which, if you think about it, it was created in isolation and there was no further interactions into the future or previously as part of this range. Therefore, we are going to be ruling out that one and obviously select this one that I just mentioned as the bottom of the bracketed area. Now, on the upper side, we are going to look to work it out the same way. And notice here that we have a high, a second high, and a third high, and there's no alignment between this high and other wicks or bodies, and there's no alignment either between this high and wicks or bodies. Therefore, if that happens to be the case, by default we are going to be selecting the highest point of that range. Okay, so in that case, this is going to represent the highest point of this range. There wasn't really any clear top-sided level that would have come, would have had multiple interactions as in the case of this bottom side. Therefore, we are going to be selecting the highest point of the range being the highest swing point before the breakout of the range. Okay, so this is going to become our bracketed area. From there, the 100% projection target. Okay, we can even adjust it a little bit further because I'm not quite sure if I'm being as precise as I need to. So let's just make sure. So the low side, we've agreed that it was that level, and on the upper side, we've agreed that it was that level right here. Okay, so there you have it. Bracketed area, 100% projection target, and the price rejects at the very peak. Okay, we also had the 1.10 round number, so obviously there was plenty of confluence, 1.10 plus the 100% projection target, which adds weight to the confluence. As I said, do not use the 100% projection as a standalone, but rather add confluence to it. If we are in a position and we want to run that position on an active trend to the 100% as a standalone indicator, you may allow yourself definitely some flexibility, be lax, because that could still signify or still mean that there's going to be a reversal around that point. But if you want to initiate a position, for example, around this 100% projection target, knowing that you are aligning with the higher timescales, then you definitely want to see that with a bit more of confluence. But as part of this lesson, what really is important is that you get the notion of how things work as part of the 100% projection, how we would draw it, how we can identify it in the chart, etc. Okay? So let's just continue going through a few more examples of how we're going to be selecting a bracketed area as part of a range. So let's identify the next time that we've come to detect a range, which would have come, in my opinion, this is a good example of a range. Okay, so we are going to once again select the highest point, in this case the bottom side of the range. It's clearly this one. It's got a lot of interactions, and the low side, I would say that through these closes and through this week, this would actually qualify as a nice bottom side of the range. Also this one. So do not be shy, do not be afraid to actually draw a couple of 100% projections. You know, there's nothing wrong with it. Work out your numbers, and don't for a second limit yourself or restrict yourself to just one single 100% projection. You can actually draw multiples. Okay, so the first one that we're gonna draw is like this one, and then the second one, actually, now that I'm realizing, notice that we have this high, and then this gets retested on a SR flip, and then this one also gets retested. So actually, if we think about it, this would have been the bottom side of the range, and this would have been the top side of the range. Okay, I actually overlook this point, which then makes this a great candidate to be the bottom side, this being the top side. Now we have our bracketed area, and the 100% comes right there. Now this time we are not 100% precise, but definitely it is at that 100% projection that, you know, more or less that's a good approximation of where the price is going to be turning around. Okay, so hopefully you're starting to get a good notion, a good idea of how this tool can add another powerful input to our technical analysis. Let's work out one more example. Now it looks like there was a volatile event here, could have been a central bank decision, we're not sure, but I'm going to be drawing once again an example. Here we have clearly the bottom side of the range through these interactions, and the top side, I'd say somewhere, I think I would call this one the top side. So there we have our bracketed area, and now let's find out, in this case we were not that accurate by the looks of that candle. So as you can notice, this time the candle did blow through the level. And something that is going to be also important is that whenever the 100% projection target is broken many times over, and we have a close beyond that 100% projection, not in this case because, as I said, there was a volatile event and technically things are not going to work the same way. But whenever we have a close beyond the 100% projection, it is likely that this dynamic, what used to be support in the way on the way down, is going to be acting as dynamic resistance. Okay, and the next area that you might want to be paying attention in the next move down is going to be then the 200% projection target, and then you can start thinking about the subsequent 100% projection targets like the 300 or even the 400 as the next potential targets. dynamics are continuously evolving, and you can start to find further confluences by drawing from different bracketed areas, or if we come to into an active trend, new 100% projections. Okay, so it is not fixed in stone, and it's definitely going to take screen time and you being actively working out what 100% projection targets might come next. Okay, as part of either a range that was broken or as part of an active trend. Now, the last example I'm going to give you to identify bracketed areas within a range is this one. So we can clearly see here that on the top side, this is a great level that jumps out at me. And on the bottom side, we got this level right here. Okay, so what I'm going to do, I'm now going to be removing the painting. I'm going to grab the Fibonacci tool from the bottom to the top, and we are going to work out, we're going to work out whether or not this time the 100% projection target was precise or not. And there you have it. Once again, I'm not making this stuff up. We had one interaction, second interaction. Now, the fact that I haven't selected that week is because notice that later on we have this week, which happens to align with that one right there, which we also have another interaction. Notice that we also have a close through the same location of the previous weeks. And on the way up, notice that we also got 1 week here, 1 week, second week, and a third week. So to me, these are the points of highest interaction. And now the range gets broken, and once again we are precise to the very peep. And this time we are not talking that it did coincide with a round number, but rather with the 1.1160, which happens to be a much more random number, if you will. Okay, so there you have it. That's how we're going to be calculating the 100% projection when we have a range. Now let's shift the focus into the same calculation of the symmetries, but this time whenever we have a active. All right, so let's get started, and notice that I'm around the same time as I left the previous example of the ranges, so I'm not cherry picking anything. Notice here that we did break a range and we starting to trend on the 4-hour chart. Now, the way that we want to be accounting for bottoms and tops, or tops and bottoms depending on the direction as part of an active trend, is we want to be drawing the highest point through the breakout point, and that's how things are going to be working out as part of identifying a 100% projection in an active trend. So in this case, we are going to be selecting the peak and the breakout point as our bracketed area, and we're going to be then making sure that the Fibonacci retracement shows that 100% by having drawn that from the top to the bottom in a downtrend. And what do you see? The 100% projection once again acting as that wall, acting as that price in that price location in the chart where the price is going to get rejected. Let's now identify when is it that we have another active trend. And the next active trend that I notice is through this sequence of lower lows and lower highs. So let's work out the 100% projection at every interval. The first 100% projection comes through the alineation of these highs and then this low right there, which is the breakout point. Boom, 100% projection met to the very peep, a reaction in price. Let's now work out the same Y, the same logic on the way down in the next successful rotation. So we're gonna grab the Fibonacci tool and we are going to be drawing that from the top to the bottom. Boom. It doesn't get more precise than this, guys. And let me now zoom in the chart so that we can really gain a lot of more details through, making sure that I've drawn that from the very top through the breakout point. And there you have it. That's where we get the reaction. And remember, these are going to be places that either market makers are going to be setting limit orders, either the sell side are going to be having a reassessment and taking profits off the table. And because the savvy investor, the savvy traders out there notice this type of harmonic patterns based on symmetries, they're also going to be entering contrarian type of trades in against the dominant trend. And the aggregated, or the total effect, if you will, the accumulated effect of these three forces coming coming into action, into effect around this point in time, is going to create this reversal in prices. Let's now work out the next one, which happens to be this one from the top to the bottom. 100% projection met to the very pip right there. Okay, so as a conclusion, we've analyzed once again another directional bias to the downside. It was an active trend, and it has been precise to the very pip. In the three sequences of examples on the way down, we've been able to bottom pick the absolute lowest point before buyers came in, thanks to the 100% projection target. So now you tell me that this is not going to be a tool that will be important. I'm not saying that you're going to be making decisions out of it, but it's definitely going to be adding yet another very powerful technical component that we want to be accounting for when analyzing our chart. And the final note that I want to remind you is that there's going to be actually nothing wrong in drawing multiple projection targets. In fact, I encourage you to experiment with that and see how many points of confluence you're able to find in the charts. Now, what I recommend personally is that you work out these 100% projection targets out of your HTF1 and HTF2 or your higher time frames. Otherwise, you are going to be ending up with way too much information to handle as part of your analysis. Remember that we want to enter positions in our lower time frames, but we want to be first getting a good grasp, getting a good understanding of our surroundings through the higher time frame. That's what's going to represent the context. Okay, these projections are going to be working best whenever they happen to be applicable in the highest time frames, because there's more chart information. It captures more data. Okay, and the data therefore is going to be more relevant. Okay, so feel free to experiment with these multiple drawings of 100% projection targets, because you are going to only then add further and further layers of confluence as part of the precision that we can get in analyzing charts. And let me just give you a couple of examples of what I mean by this addition of multiple 100% projections, and with that we're going to be concluding this lesson. Okay, so for example, here you will notice that we did have one single point low, then we got a lot of points low right there. So I would be inclined to actually select this one as our lowest point, and this one as our highest point, because notice that this is another wick that happens in isolation, but rather here we have the close, and then also here we got several closes. So I would be actually selecting this one right there. So right off the gates, I would be aware that this actually represents a 100% projection. Now let's find out if, as part of this minor active trend in the 4-hour chart, we can actually start to work out whether or not that level is going to come in confluence with the 100 or even the 200% projection target. And long and behold, what do you notice here? This same gray box that I just drew, it happens to be in confluence with the 200% projection target. So there we have it. Now we have even one more element of confluence. Now, what do you notice at the next highest level? It happens to be the 200% projection of this bracketed area, and it happens to be the 300% projection of this minor swing low that was detected right here. Okay, so we're talking about, we've initially selected this as a bracketed area, and we've also selected this as a bracketed area as part of an active trend. We've calculated that the 100% comes there, which doesn't act as a wall, but notice that on the way down it does act as a dynamic support, as I was mentioning. We've identified though that the 200% of this bracketed area is going to come at the same level as the 100% of the next one. Okay, so there we have a big point of alignment, a big point of confluence. Okay, and in the next one, notice that we also going to have a 300% plus a 200%, and the price happens to struggle at that point. And the more that you work out your charts, the more you're going to realize how powerful this tool is going to be to call bottoms and tops, even though we're not going to be in the business of calling those bottoms and tops and enter positions out of it. This is going to be extremely instrumental for us to actually be even to have even more refinement in how we're going to be selecting areas to take profits off the table. And at times it could be a reinforcement of an area that we were already working out as a potential entry point if it aligns with supports or resistances with a high time frame, TT pattern, etc. Okay, so there you have it. Hopefully you've enjoyed this lesson, and I'm gonna get ready to go through the next one. Cheers.